Welcome back to the channel. It's a pleasure to have everybody here. And a quick disclaimer for you. Kindly note that this should not be used as a form of signal. This is strictly for educational purposes, so you know how to catch fish yourself and not somebody giving you fish. Great, and I'm sure you understand what I just said. You learning how to catch fish will last you for a lifetime, while somebody giving you fish will last you just for that day. Great. So with that said, we're going to be talking about trading on Mondays. Yes, trading on Mondays. Do you trade on Mondays? Interesting. Now, why are we talking about trading on Mondays? You know, Mondays more or less is the official first trading day of the week. Yes, today is the 8th of November, and this is the official first trading day of the week. But what can we say about Mondays? If you've been trading for a little while, and maybe you haven't even noticed this, Mondays are usually slow. Do you agree? That's one. And then also, Monday is the day when the market is trying to pick its direction for the week, right? Monday is when you have a lot of false moves. You have a lot of fake outs. It shows you that it's going up, and then before you know it, it starts to reverse. And then also, Mondays most times could easily be a paint watching day. Yes, Mondays most times could easily be a paint watching day. That means that it could be really slow and of course boring. Have you ever watched paint dry before? That's what we're talking about. So a quick advice for you listening to me: for Mondays, try not to rush into the market. Let the market settle down. Let the market come to you. Let the market present opportunities to you. Most times I see traders, once the market opens, they just dash in, right? Which obviously is not the proper way to trade. You need to carry out your analysis, your proper analysis. You need to mark your support and resistance levels. As you can see, we have our support and resistance levels on the chart over here. Now, after you do this, what you are supposed to do next is to wait, and wait some more. Yes, you're going to do a whole lot of waiting, which is what we call patience. You need to be able to exercise patience and discipline in this business. One major problem with traders today is that they believe they need to jump in early. They believe that they might miss the train, they might miss the bus if they don't jump in right early on Monday. No, that is not how the market works. Trust me, right? Because price usually reverses, and once price reverses, that simply means what? You don't have to jump in on a Monday. Wait for the market to pick its direction, and then wait for the pullback, wait for the retracement, and then you can now get on board, right? Now, we always say that you need to let the market act, then we as traders, we react. So we are supposed to call ourselves reaction traders. Don't jump in. Wait for things to settle down. Wait for the market to come to you and then act accordingly. Now, this is just a quick one just to talk about trading on Mondays so that you know how you should approach Mondays. And speaking of Mondays, it's not all Mondays that are usually on the slow lane. It's not all Mondays are usually on the slow lane. Like today, later today, we have the Fed Chair Powell, who will be on the wires later by 4:30 p.m. right? And then we have the Bank of England Governor Bailey on the wires as well by 6 p.m. as well. So we could easily have some volatility today later by that period. So what I'm talking about now is majorly on Mondays, not necessarily on all Mondays, just for us to be aware of, right? So once again, don't forget, just mark out your support and resistance levels and then patiently wait for price to come there to give you your opportunities to jump into that market for the week. Now, if you want to learn how to draw the support and resistance levels, there's a free course below where you can learn about price action, support and resistance drawing. You could also learn about time frames, how you can use time frames to your advantage. Most people I meet, they always say, hey, I don't have time to trade. I don't have time to trade. But the truth now is that with time frames, you can easily adjust it to what you are doing. It doesn't mean as a trader, whether you are trading the Forex market or the crypto market or the equity market or whatever, it doesn't mean that you need to be staying at the market every second. No, you can be checking at the market at intervals of 1 hour for 1 hour time frame, or 4 hours for 4 hours time frame, or intervals of 24 hours for the daily time frame. So that is very important. And you get all of this information in the free course, not the free cross, sorry about that. You get all of this information in the free course, and it's in the link below. If this video was helpful, don't forget to give it a thumbs up. Don't forget to hit the subscribe button if you are new to the channel. We'll be giving you stories about the business so that you have a better understanding, and then you can take advantage and be clear on the road to your financial freedom. Thank you, everybody, and enjoy the rest of your day. Goodbye for now. Cheers.